Bullish IPO is coming out on August 13th, and this is a non-biased opinion from a long-term investor. I'm more risk adverse than the average long-term investor with my peers on this Blossom app, and I have a really high risk tolerance. A lot of people might even call me crazy for doing things like Figma and these IPOs. Well, I'm very prominent in my risk strategy and also with the idea of risk for reward. For example, if Amazon had a 9 out of 10 chances to make me 2x return, while something like ASML, if it had a 7 out of 10 chances to make me a 10x return. Well, if you were on the conservative side, you would probably choose 9 out of 10. But in the long run, if you kept doing these 9 out of 10 odds, it would actually be a less return if you took the more risk adverse approach, which is why I like to have an open mind on other strategies, basically, because risk for reward is everything. So let's get into it. Number one I want to get into is the overbought rate. Later in this video, I'm going to go exactly what I'm doing, show you how to set my limit order strategy on this, and what my exact time frame on what to do it, and what type of people should be actually getting into this. What type of people, how much money should you really be doing with this? Everything I'm going to be doing in an all in-depth video, how people are valuing this. So why should you trust me, a random person? Well, you see these prices? The initial price that was offered, Figma was at 33. Now it's at 80. Well, why does that? Even something like Firefly went up pre-IPO, but at open went down. Why are these companies going up even in the dark markets when we can't buy it? Because of these guys. Investment bankers, these are the ones that value these people right here. They value these companies at these specific IPO prices. Well, these are fundamentally using numbers and statistics, whatever charts they use. This is the correct valuation. But the thing is, we're in a bull market. And right now, something like Amazon could be fundamentally valued at fundamentally valued at 180, but be worth 220 because of this how the market works and how people put money in over time, and there's more than just straight numbers backing by everything. That's the one level. Well, if we take it a step further, that means Figma should be worth a little bit more than 33, but not at $140 to $80. So what is going on here? Something we like to call hype. Hype is a big factor into this, which we can see in the oversubscribe rates right here. So Figma, there's 40 times the amount of shares oversubscribed. So that's why if you did a pre-IPO for this, you probably only got one share. Same thing for crcl, which was earlier in the notably in the same sector as Bullish in the crypto, Stripe, and stablecoin industry. 20. So basically, we can find all this information before the stock even opens. This is really important here. The way you can find out is if you go to Bullish, it's gonna come up the morning of, or whatever the ticker is, and there will be news articles probably released telling you exactly what the oversubscribe rate is, how much did it go up, stuff like that. There's also Discord servers, and there's also Twitter updates that people put out. Twitter or X, whatever it is, you'll be able to find this information at if you're the one to. And there's also the NASDAQ website, which also updates you. So, Bullish IPO. The oversubscription rate, of course, is not disclosed yet. So what do I think is a healthy oversubscribe rate? Well, Figma was offered on, I think, 2 platforms. crcl was offered on 1 to 2 platforms. Firefly was available on 1 platform. Let's see how Firefly did. Firefly literally just IPO'd just a couple. Firefly IPO, which literally just came out less than 5 days ago. So what exactly happened? So this chart doesn't really tell it all. This chart doesn't tell it all either. It basically, what really happened was right after open at $70, it tanked to 60. Well, then after that, it went up to 70, which was nice because if you would have bought it open, you would have been down 10% at first and then been up 5 after. So what do we know about this? Firefly is a okay company. It is not amazing. It is not terrible. At least it's not that bad. And it has a 20 oversubscribe rate, which is its hype. If you were looking closely, you can see that Figma has a lot more shares than Firefly does. So, if Firefly had almost 40 million shares like Figma did, it would have a way lower oversubscribe rate, saying that the hype on Figma was exponentially larger than Firefly. So why is this important? crcl was 20. This was before the hype happened, so it was a lot less hypey. It still had a lot more shares, and therefore had a higher oversubscribe rate than Firefly. So where am I going with this? Hype is the third factor. Is we have the valuation, we have the fact that we're going in a bull market and everything's a little bit overvalued, and the third thing is hype into this. We need to evaluate the amount of hype. The last factor is actually company fundamentals. Another reason why I believe Firefly only went up a tiny bit before dropping is because the company fundamentally wasn't groundbreaking and it didn't have good numbers behind it. 175 million revenue, 175 million debt, basically breaking even, while Rocket Labs in the same sector is doing amazing. And Lunar, even though it's doing terrible right now with its launching of its space rockets or satellites on the moon, it has only 10 million debt versus 170 million revenue. So they check no boxes for anybody. And the only thing they have is hype. And that hype was able to push it up. So what does Bullish has? So like I said before, Figma was offered on, they were limited on platforms. Platforms are now figuring out that they can make money off this because people are willing to put their money in this without a second thought. So now we have SoFi, now we have Moomoo, now we have Webull and Robinhood doing this. If you don't know what those are just brokerage apps where you can buy pre-IPO and invest. They all have Bullish, which is about 2 times the amount of brokerage that did this for Figma and for Circle, and 4 times the amount of Firefly. And if we really looked at the Moomoo app, on the top, like Charles Schwab, if you were in the search bar, it was promoting Bullish IPO. Even if you didn't search anything, instead of search, it would say Bullish. This is very highly promoted, and this is very highly sought after right now. So the only thing you could really compare it to in a similar IPO would be crcl, Internet Group, which deals with stablecoins. So what did they do? This is where our strategy comes into play here. We can't get caught up into this. If a new investor was doing research on this, besides this, they would see that this basically, besides the one they chart, sorry, it's not really loading, it would have gone up, and really there was no drop in the first 5 days of it. It was going up. So what are these investors going to think is they can hold this with diamond hands, as we call it, hold their bags, while I believe it would look something more like Firefly, where it just dropped down, even though it's a better company. This is a new introduction to Stripe and a little bit of stablecoins inside the crypto industry, which is another brand new, like crcl. It has worse fundamentals. It's not as a groundbreaking company as crcl will ever be. But the thing is, people are changing. Figma is huge, crcl was huge, and CoreWeed was huge. Here's a screenshot from one of the degenerate Instagram pics channel. This is what I'm learning. Then hop right out. I did it with Fig. That's the method. It worked on Figma. What are they referring to? Well, Figma only went up for the first day. Even though it was an amazing company, it works with 95% of the Fortune 500 companies. It's obviously the best company out of all of them by far, fundamentally wise and subscription wise. So that company only went up in the one day with all that hype. Of course, we're getting an added boost with Bullish because of the crypto, just the crypto name on it, and the fact that we're getting more platforms that we can oversubscribe, which is good. But Figma was so groundbreaking that it really dropped a ton. It went up for a good amount, a day and a half in the overnight. So people have to sell this before the day, early. Well, like I said, this isn't just the consensus. This is a consensus in everybody. Everybody that does zero research in this, that has gone into IPOs before, will now know to sell early. And this is an ongoing trend. Like Firefly, we only had about a 5-minute window to sell out to actually make a profit if you bought a limit order. So, what is the plan here? More and more IPOs are going to come out. And if these are not extremely groundbreaking companies like Figma, like Bullish is a okay company, but with a good hot topic and a good hype, you are going to need to sell out in the first 10 minutes. Hear me out here. People are learning. They are learning to sell out earlier. This is similar to a meme coin. The way the stock market works is because these companies make innovations. Like the idea that people make stuff over time. We started from the fire into the wheel, and now we have Palantir and NVIDIA. They're making huge gains. So the way people can make money off of this is because everybody can make money off this, because the idea that we invent things in the long term, and there's always new inventions, there's new things that are coming out, and these companies are gaining on this. And if you know what meme coins are, these small meme coins, there's nothing. There's no progress made. There's no expansion. There's only people that buy in, which puts the price up, and people that sell out, making the money. It's similar to this. A company cannot make it can't make progress in one day, or let alone a week. There's no fundamentally gain or any fundamental behind it. So the only thing that's pumping this up is people buying in and people selling out, fundamentally. So why does Bullish have something else going for it? Well, Bullish has over 1/3 of its shares that's going to be bought by BlackRock and ARK Invest Cathie Woods. That's amazing. Sorry. BlackRock. Why is this important? Institutional investors, these people can get at a cheap price. From what we've known in these, especially in Firefly, the worst one so far, it hasn't dipped below its IPO price. They know they can't fundamentally lose money on this, most likely. But the thing is, they can't sell. They have a lockup period because they can buy the pre-IPO price. They have a lockup period. So 1/3 of the shares are locked away, won't get sold off instantly. Good. This is good for us. Will this mean we can hold it longer than a day? No. Figma went up overnight. I was feeling like an idiot. I made mistakes. Figma went up another 20% overnight. But what these people saw is it went up overnight. So what they did is you're like, hey, I'm going to sell out of Figma. So they went to go sell like so and went to sell something. I don't want to sell Amazon. Let's go. I want to market. I want it now. Boom. I'm going to sell this. Boom. Order received. Did it go through? Let's see if it went through. Amazon did not go through. Why is that? Because it's overnight. What happened is it pumped up so much, and overnight people were taking profits. And in the morning, it crashed back down because everybody sold. So at the same exact time. So that was a good thing. Of course, it went up overnight. But with the thing of people selling, my strategy, first I got to cancel this. You should not hold this overnight, let alone a day, because you cannot sell this. Think about this. Think about the risk for reward here. We can make 10% in the first minute. As a long-term investor, if you guys are just getting into this and you have no idea what investing is or long-term investing, 10% is what you make in average year in the S&P 500. A year, and make in a day. These people are going to see CRCL and believe they can make maybe at least more than 10%. Diamond hands. We want to be the first ones to sell out at a profit because we don't want to lose money in this. This is why I'm comfortable and risking a lot of my portfolio, probably half of it or more in this position, because I know that people are going to try to go more for this. Of course, what else is in this? So like I said, we have Robinhood and others pre-IPO. So why is this important? Well, of course, they can request shares, but of course, it starts with institutional investors, and then really, really rich customers get to go in. And then lastly is retail investors on these platforms like Robinhood, SoFi. They get in last. So that means everybody got one share of Figma, and it went up in the first day. This is direct correlation. I'm telling you, it is amazing. The day of, in the morning, if you requested shares of Bullish, if you get one, dare I say 0 shares, that is amazing. Why is this? Robinhood throws around something you may call, they throw around something you may call a penalty or a restriction. What is this? If you sell IPO in 30 days, they may give you a restriction. If somebody gets one share and the share price goes up a shit ton, they are not going to sell most likely not going to share their one share because they don't want to get restricted, and two, they wouldn't risk the restriction just because they would make extra $40 from the price pumping up 50%. So what's bad? If people get more than one share, 2, 3, 4, 5 shares, people are going to want to sell out if they're up and won't care about the restriction. Robinhood didn't restrict people that sold out. So if they are up instead of that $40, 4 times that, 5 times that, $200, they're going to sell out, which is then going to cause a crash. So another indicator, oversubscribed, and we're also using how many people get shares. Okay? That's what we're using. I personally don't do pre-IPO, but you can join a Discord. I don't really condone these ones, but you can join a Discord that people talk. Any stock investing Discord, in the morning of, they're probably going to be talking about Bullish because it's such a big thing right now. And they're going to be sharing. You can ask, oh, hey, how many shares did you get? And then be like 1, 1, 0, 0. That's a good sign. That's a good sign. We want them to get as little shares as possible because these retail investors are going to want to sell out. So that's good. We have the 1/3 lockup period. And then we also have the other people that get 1 share. Hopefully they don't sell. So the only people we're competing with now is everybody else. People who did limit orders. What's a limit order? This is the main mistake somebody's going to get. This is the mistake I made. I saw the price of Figma go up 3 times before it even opened. I didn't do my limit order. And when Figma came out, I saw the price go from 85 to 110 in 10 seconds. Say from 85 to 100 in 10 seconds in front of my eyes and got in around 100. I fortunately was enough to sell out of 110 and make a little bit of profit, but I will never make that mistake again, only on these quality companies. So how do you do this? If you don't know what a limit order is and you're trying to buy this, you would literally have to sit here and wait. And then once it comes out, if it eventually spikes up, then you're going to have to buy it and you're going to get in late. A limit buy will essentially allow you to place something over it. Let's say the share price of Bullish is going to be on $30. Personally, it could possibly 3x and before it even goes up, and so I'll do a limit order of 100 and I put as much shares as I can in my available cash right here. You can't go above that. So, but Firefly, take into account, Firefly dipped 5% right after it came out. One, that's not a quality as a company, less hype. But let's say fundamentally, if Bullish does dip, it just takes a dip right away. So, but the thing is, I'm confident in this play at least. So, but I'm willing to risk this. So I want to lower my average buy. By us doing this limit order, we can guarantee us shares right there. So let me just do this for you. Limit. It's okay. I don't have enough money in here, but I'll do limits. And basically, let's say Bullish opened up at a nice little. Let's say Bullish opened at a nice little $67. Well, that meant I get filled on all my shares at 67, but I did it at 100. So what that means, I have another $47 per share that I didn't put money in. So I will have that money liquid inside of my accounts. So that's why limit orders is nice, because you're not putting all your money in and you will never know how much money you're putting in. So that means if it does dip right after it comes out, I can put in more. So if it dips, let's say it dips 10%, let's say it dips 10% after open, I buy that dip. My average loss is now turning to 5%. So when it goes back up, at least in the 1 to 10 minute range, I will make 5% more than I would have. But that's only if I use half. But it will be less. But that's just the idea here, because this is what I'm gonna do personally with my account. So what's next? What else do we need to look out for? So we look at oversubscribe rates. Oh, I didn't tell you my oversubscribed. Since there is 20 million shares and compared to Figma, I think it can hit 80 80 would be insane. But just for giggles, a low end, I'm thinking 30, because this is 20, but I'm thinking 30 to 80. That would be amazing. Anything above 50, that would be amazing. Oversubscribed. One, that would push so much hype, but it's kind of skewed because there's not that much shares, but that would look amazing. A news article comes out hour before open and be like, frick, oversubscribed. Well, so another thing we can do is we can look at the price. So if you look up the ticker symbol and it comes out, it will be blank. It will say whatever the IPO price is. It will say 0. It will be like dash dash. You won't be able to see them in post markets. How do you see the post markets? That's where I said Discord. That's where I said Twitter. Specifically in this one, let me show you guys. This guy was so helpful to me. I actually didn't have a chance to look at this, but he basically he answered my question for me right here. He was doing callouts. Look at this. He was doing 70, 72 on Firefly. I'm like, dude, you can't see Firefly yet. How are you doing this? Helpful enough, you can follow this on the Nasdaq's website. I personally haven't gone to this, but from what he's telling me, this guy is he's been doing call outs. People do call outs on this. It will tell you the price before it even opens up. That's when institutional buyers are buying. And I think a healthy price jump will be anywhere from 1.5 to 3 times max, which is why I'm doing my limit order at $100 per share. So I don't think it can go above 100 when it opens up. So for you pre-IPO investors, just take a note into how much shares you have at the beginning of the market. And note again, this window is getting smaller and smaller and smaller. CRCL, lucky for not, it is going down here. As more investors, if you do research into this, you're going to pull up CRCL. Of course, we have the diamond hands. This is going to help our cause. People are going to think they can hold this, but they eventually know it's going to fall down. So these companies aren't worth that much. Will that stop them from hyping it up and going to it? Probably not. But they will see that at all time, Figma is down 35%. They will see that. Before, it showed from the IPO price up, it would have been positive. But no, they don't show it anymore. They changed it. So who are the main losers going to be? People who hold overnights. People who hold longer, at least 10 minutes. You can make money past 10 minutes. I'm just, like I said before, my risk for reward. I'm a long-term investor. I don't take risk I don't need to take. If I can take 10% in the first 1 minute, 10 minutes, I'll take at least half of my portfolio. Half of my gains in there because I already made in there. Right? Maybe keep a couple a little bit. I'm not. People think 10% isn't a lot. Well, what do you think? You think it is, bro? Like, they go to CRCL, they go to Figma, and like 50%, 400% gains. Like, we don't need that. If you, eventually more IPOs come out in the future, if you get 10% for a couple IPOs, that can be like 50% there. If you keep repeating the strategy. But like I said, the window is closing. People are selling out earlier. Even these people that are following just a random picks, dude, they are learning. So who is definitely 100% losing money on this? Who is people that see this on go to their Webull account and say, Bullish, hey, what's that IPO? Let me try to buy in the morning. Or maybe I'll put a limit order, but I have to go to work. It's on a work day. Mostly the degenerates like us that don't have jobs or college students are going to make the most money from this. Well, at least the most percentages, because people go to work either, one, if you go to work on this day, one, don't take off work to do this. And two, if you do go to work, don't buy into this at all unless you can monitor it for 4, 5. You can actually monitor it. Personally, I'm waking up at 6:30 a.m. If you want a live stream for that, comment down below. But I'm up and I'm watching it. As soon as it goes in, my eyes are on it. I'll probably have around a lot of money in this, but my maximum loss is probably around 10%. If it goes down to 5, of course I'm gonna hold it because I think it can go back up in the 1 minute, 10 minutes. That's when it's the most volatile. When it first opens up, which I think it can swing in the right direction here. But as more IPOs come out, a window could get smaller and smaller because people are gonna learn eventually sell earlier and earlier and earlier. And then the only IPOs that can really make money is quality IPOs, like when Discord comes out later or whatever real companies come out. Well, I mean, real company, like companies that you know. Like, no one heard about Bullish. No one heard about you may have heard of Figma. No one knew about Circle. But real companies will eventually IPO. And that will be another opportunities. But the window is closing, like I said again, which is why I'm doing this now and why I'm using a lot of money on this. So, we look at the oversubscribe rate. Then we want to look at the phantom price where you can't see using Twitter, Discord, or this NASDAQ website. I'll probably just put it in the search up NASDAQ and see a little bit before. Make sure if you do have money in here, you deposit it. You try to deposit. If you haven't deposited it now, this is a video. Don't share this video to your friends that you said buy this IPO if they have zero interest into it. If you haven't put money in your account, don't do this. You're gonna be rushing. You have a deposit limit. It'll be in your account. Can you use this? You might buy it and you get a really bad notice because your funds weren't available yet. And if you are planning to do this and sell out of some of your funds, sell them out Monday or Tuesday because you need 1 day for your funds to come back in. Don't share this video to somebody that has no interest in this and say, hey, you can make a bunch of money on this. Then they ask you questions. And they're going to give them false hope and they could lose money because they're not going to do this right. Share this video to somebody that's going into this blind. Or somebody that's done research but you want to give them a little bit more heads up on some realistic expectations. My expectations for this is to go up a little bit in the first 1 to 10 minutes. A little bit. Hopefully I said anchor 10, 20, maybe. It's optimal. If it keeps going up at past 10, there's no way I'm selling that. But first I see that dip on it, I'm gonna get out of there. Like, give me my money. But let's be realistic here. Being realistic on what to expect on the day from it. Like I said, it's a different perspective. Long-term investor. A lot of people. If I posted this on here, I would probably get. I'll lose my people. Might unsubscribe on this channel. But this is part of my long-term strategy. Like I said, I didn't say this, but let me use a casino example. The reason casinos win over the long run is because they are the odds skewed in their favor. Take roulette. If you play roulette and you do red or black, you have a 47-point-something% chance to win. Sounds pretty good, right? 50-50. It's not. In the long run, everything will go back to the mean, as in statistics, and you will lose, and the house always wins. A horse in the blue moon, someone wins, but the house always wins. So what I'm doing is with this risky thing, I am probably going to keep doing stuff risky like this, but proportionate for my portfolio, and then have good exits and entry strategies, and do this in a way that I can reiterate, the 7 out of 10 chances for a higher return versus my regular portfolio, a 9 out of 10 chances to make a good return. But, like I said, in the long run, if you do this right, if you lose today, in the long run, if you do it right, and if say, I don't know the percentage of winning this. Let's say you have 70% chance of me actually executing this strategy properly, and actually I take 10%. Well, 30% it goes tanks. Well, I do this again, assuming I have a 70% chance of rate of return of winning this 10 up, 10 down. Well, in the long term, let's say I win 7 out of my 10. That's 70% up, 30% down. So I made 40%, and probably if I use the same exact amount, probably around 40 to 35% return. So that's why I'm saying risk to reward is so important. If you have a strategy and you're cool with it and you don't want to do anything else, continue your strategy. But for me, I like finding new ways to make money, and I'm never gonna turn away from opportunity that I think is profitable, that can potentially make me money. Keep an open mind, but don't have your mind too open. Kind of a cross way of thinking it, right? Because if you always take these random, you have to have a base. And like I said, we're about to close, but the sponsor of this video is my YouTube channel. If you're into IPOs, go ahead and subscribe. And if you are also in IPOs, but you want to learn this, like I said, it's fading. This opportunity is fading away. It's a short-term play. The only way to make money long-term in the stock market is to take these fundamentally long-term adjusted risks, which is what I make videos on, not financial advice, but I think it's a good way to start, and then branch your way out to other YouTubers too. So go ahead and subscribe, like the video maybe, share this to somebody that is interested in Bullish, and definitely don't share this to somebody they said, hey, you should do this, and they said nah, or somebody that doesn't even know what the hell this is. Just make sure you stay safe, use your risk, use your head, and hopefully we all make lots of money. You understand? Well, at least people that are watching this video are gonna make money. If every single Bullish investor see this video, then we're so cooked. But they're not. So peace.